Going live. Hello, everyone, and good morning. Welcome to our latest session from amBaaSsador on the layers and players involved in an embedded banking or BaaS or partner banking or sponsor banking environment. Whatever you want to call it, there's a lot of names for what we have going on out here in this exciting space. Now, Steve, I know Ethan's going to be joining us here in a few minutes. We'll add him to the stage, but why don't we start with talking a little bit about the excitement that we both saw last week at Fintech Meetup in the embedded space. I know we were out there together and we weren't. We drifted apart during the day, each having our own conversations, and it never ceases to amaze me. Just the excitement and just the conversations going on out there in the embedded banking space. Hey, Ethan, welcome.
Hey.
Hey
Guys.
We'll introduce you in just a second, kind sir.
Look who decided to show up.
There's a lot of bank and fintech deals being done. That
I was
part of.
I'm not gonna lie, I was hoping you were gonna be a little bit later so I could pontificate a bit and talk about you.
We're gonna do
that. I'll leave.
No. Yeah, would you leave? We'll text you. You can come back in. Showing up with this sharp haircut. I mean, Ethan, we saw you in Vegas last week, but
yes. we all survived fintech.
We all survived.
Not that tight and right last week for sure, but he's looking good today. So glad to have him.
Well, we are going to introduce Ethan in just a moment. But before we do, why don't we circle back to the question that we were just chatting about, Steve, and that is, or the concept that we were all out at Fintech Meetup last week. And I am consistently impressed by the current offering or the current sponsor banks out there in the environment, the cool things they're doing, the programs they're running. And I don't know about you guys, but I was energized by the conversations that I was in and the follow-up ones that I have scheduled over the coming weeks. What are your thoughts on Vegas Fintech Meetup and the BaaS environment right now? I guess, Steve, you wanted to pontificate. Let me start with you, Ethan. I hope you don't mind.
No, I mean,
he's been waiting.
I want to defer to the guest. I mean, we've been anxiously anticipating his arrival. So I personally, selfishly, I want to hear from Ethan. So
Let's do it. Ethan Singleton, ladies and gentlemen, the one, the only partner of FS Vector. The man received a promotion and an entirely new office since we first put his nice picture and name on the invitation. So, Ethan, first of all, congrats on that, kind sir. Lots of stuff. You're welcome. Great stuff going on.
It's been an awesome start to the year for FS Vector and myself. We opened a New York City office, promoted a partner. We've been adding new people. We just added, which I think is probably the biggest pickup because it just allows us to unlock an entirely new vertical, which is, her name is Gretchen Keller. She's going to run our talent advisory and executive search function. We've just been crushing it, but a lot of it's just awesome clients that we have and partners, and like the work we do is so much fun. I got engaged as well at some point in all this, so it's like,
congratulations.
It's been a really, really cool start to the year. But no, like Fintech Meetup, it's I've been doing Fintech Meetup since it was a virtual, Zoom only during COVID type event. And it's continued to progress and mature over the years. And we've had Fintech Meetup when the regulatory environment wasn't so friendly. And now we have Fintech Meetup when the regulatory environment is very friendly, both for bank and fintech and digital assets. So the vibes were high. There was a lot of existing bank partners there that were out and about looking for new fintechs and looking for good conversations. There were new banks, a lot of new banks, which is, I think, something we should really dig into today. Okay, we want to be in BaaS now. It's still very relevant, and we think it's a really nice way for our bank to mature to the next level and stay relevant, frankly. And it was really great having those conversations and seeing that, not just interest, but like commitment.
Yeah, and these are some things I want to get into with you as well. I'm going to ask Steve. Well, Steve, why don't you go ahead and introduce yourself and talk to me a little bit about your thoughts on Fintech Meetup?
I didn't realize I needed to introduce myself.
Wow.
The
humility is high.
I mean, Yeah, I'm that guy, right? Like,
Oh, wow. Please, please no. Please no. Please no, he says this in jest. I
no,
hope.
I'm like, like fintech meetup, it's always a great event, and it was different this year. It was a new venue, but if you look at last year versus this year, it was so different. And a lot of it was the sponsor banks. I saw a lot more sponsor banks. They're like, we're looking for fintechs than the inverse. And I think the supply and demand has shifted a lot. There's still a lot of opportunity in this space, but it's evolving. It's evolving so rapidly. And, I've been looking forward to this conversation. It's always great to talk to Ethan and just hearing his insights. But it's this, Ethan and I've been, we've been working on, we built a couple programs together with him as my consultant. And it's, to me, at the end of the day, just the basis of this whole line. It's like, what do you do and what do you know? And where are your weaknesses? And sometimes knowing your weaknesses is harder than knowing your strengths. It's definitely just as important as knowing your strengths. And so that's when I met FS Vector, when I met Ethan, it was, I need someone that specializes in compliance to stand this program up right, because at the end of the day, compliance is about managing that risk. And so I think, bringing it back to FinTech Meetup, the overarching theme, I saw a post on LinkedIn yesterday. Someone said that 99% of conversations at FinTech Meetup were on AI. I don't know that it was quite that high, but it felt like it was pretty close.
Are you sure? I was going to go 99.5, but okay. Yeah. Interesting. Okay.
But I think that is like, that's indicative of the pace that we're seeing and the change that we're feeling right now. And we can dive into that. But if we back up and look at layers and players, we started with the enablement orchestration layer or middleware, which nobody that
subledger, yeah, whatever.
Middleware is a no term these days.
Yeah, you don't.
Because I'm that guy. That's why I said it. But we have KYC, KYB. We've got our transaction monitoring. And so we have this, and now it's like we're talking about specialists and consultants, and we'll do that again in the next time. But really great to have you, Ethan. I don't know if we introduced you yourself.
I don't have the pleasure or privilege of having 38,000 LinkedIn followers and everyone knowing me. So I will do an intro for my measly small following. But I'm Ethan Singleton. I'm a partner at FS Vector. Have been at FS Vector for 4.5 years, where I've had the pleasure of advising banks and fintechs and digital asset companies, regtechs, technology companies that are integrating financial products in an embedded way. And my entire time here is really focused on building things and maturing things, both from a commercial perspective, making sure that you can acquire customers and you have a good go-to-market strategy and there's a scalability to the business. But to your point before, Steve, of making sure compliance is like top of mind throughout that entire journey. Before FS Vector, I was at a firm called BDO. I was doing consulting work, but not the fun kind like I do now. I was doing audits, focused on.
You were that guy.
Yeah, I was
that guy.
It didn't fit my personality. Delivering very bad news to the clients that I was advising, a lot of findings and recommendations. It wasn't my vibe, but it was the first time I had a chance to work with partner banks, was auditing their compliance programs and the underlying fintechs as well. And when I first got that like bug of, wow, who owns the relationship? What's the division responsibility? Where's the buck stopping in terms of regulatory risk? I just like really bought into it. And when I heard about FS Vector, and that was the only thing they were doing, I was like, I got to jump at the opportunity. But and before that, I was working at HSBC, where I jumped in right after law school, cut my teeth helping them remediate a consent order, which was like a really nice foundational element for all the work I did afterward, because I saw, okay, this is what happens if you do it wrong, all the terrible things that can happen. from a monetary perspective, I think their fine was $1 billion. From a reputational perspective, and then just from a remediation perspective, how tough that is. But pleasure to be here. Thank you so much, guys, for hosting me.
Thank you for joining us, Ethan. By the way, everyone, I'm Stacy Bishop. I know you can read that here on the screen. Unlike my husband, I have zero problems finding my own weaknesses. And Steve, I do want to make the offer. If you ever need help finding your weaknesses or spelling them out, just call. Yeah, all you have to do is ask. Okay?
I don't even have to ask. I know I'll hear about it already.
No,
so,
you will not. But the way you phrase that it's easier to know your strengths and your weaknesses. I'm like, that is such a guy comment, because those are things you just don't hear ladies saying most of the time. But I'm here for you if you ever need that, Ethan. I know that I'm just a fan of yours, and we're professional friends. I'll make that offer to you if you ever need it as well. Just kidding. You gentlemen, no, nothing to point out, nothing untoward along these lines. I do want to get back, though, to something, Steve, as I think through your journey in banking as a service and the fact that we have started talking about some very technical pieces, how we got here, speaking about subledger, sub-accounting capabilities and identity and other aspects. Now we're talking about the strategic consulting layer. And as I think back on your journey, though, Steve, it almost seems like you started here. Am I off on that? I felt like you and Ethan had this connection earlier than perhaps some of the technology decisions, but tell me where I'm wrong on this.
Yeah, I think, if we rewound multiple years, like I was focused on building up a community bank, updating their tech stack because it had been neglected for 20 years. And we wanted to get modern. And I kept hearing about BaaS. And I was like, I don't know what it is. I just know I need to figure that out. Mm-hmm. And I met Ethan. I actually met FS Vector a little bit earlier, but I knew that they seemed like they fit into my, I have to lead with compliance. I need an expert to help me build this, define what it is, policies, procedures, all those fun things. And then I was intrigued by it. And a few months later, I ran into Ethan at Money 2020. And it was off to the races. We spent about a year working together, building the program before we launched the following year. And now we're working together again, building out a new program. You need to find the specialists that can help you. But also, if you'll do repeat business with people that deliver for you and you like to work with. So it's always been I always said I led with compliance, and examiners, when I talk to them, so I'm leading with compliance, and that's how we built that successful program. That there was no red flags, there were no consent orders, there was nothing that came from it when we stood it up in that first year. And so there's a way you can do this. You hear a lot of bad news in the press. It's the bad news that gets written about. Nobody's going to say you're doing a great job, sponsor bank. But how do you do that? It's not just all right, I'm take it off the shelf and it's good to go. You actually you need partners and planning to execute on it, be successful in doing it.
Well, I want to now kick that over to Ethan. Ethan, do you I'm sure it's better to be involved early in a bank's past journey. Does it always happen that way, or do you find some people that are making technology decisions and then find themselves saying, "Well, crap, what kind of a program do we want to run here, or what does this actually look like?" And they come to you on the latter side. Do you find both scenarios, or?
Yeah, we do. My preference is that we're in and involved as soon as possible. It doesn't even have to be the bank has decided that they're going to get into fintech partner banking. It can be we want to think about it and we want to ideate on it and we want to build that strategy. And that's a lot of the work we've done is coming in that early. And some people might not like this, but like there are some bank partners that shouldn't become bank partners, or some banks that shouldn't become bank. So us coming in early and helping think through that strategy and actually asking the question of like, should we, instead of just immediately jumping into it, but like thinking about the culture of the bank, the ROI opportunity for them and getting into this endeavor. Like what are some of the other priorities they have and other revenue streams that maybe they're prioritizing? It's okay to like go down the initial journey of if, and if the question is no, we shouldn't, that's fine. But we do get to the point of like, oh, we've already picked our let's say our side core or our ledger provider, and we've signed the contract and we're starting to talk to fintechs, and then they'll ask, could you help us build all of the BaaS onboarding and due diligence and compliance and risk management program and oversight, and like plug in these technology vendors that we're going to need for all of that. And then it becomes like a catch-up game. Like, well, if you're already talking to fintechs, you should have your initial due diligence questionnaire and your onboarding process and whatever technology you're using to like implement that. You should have all of that set up and documented and tested before you start putting that first fintech. But that's okay. Like we can come in at that time, and we've done it a few different engagements. And it's something both for the folks at that stage and where Steve was at the prior institution when he came to us and there wasn't anything built yet. The way I like to describe the work that we do is that it's a go-to-market accelerator. And having FS Vector with you on that journey helps you get your bank partnership program to market faster and in a safer way. And kind of like looping that back to like, there are weaknesses that you don't know about, or like one of the best things you can do as a bank or a banker in this situation is be aware that there are things you don't know and know what you don't know. And then FS Vector can be the people that say, here's what you don't know. And here's how we're going to teach you and train you up and then build things so that you have a nice foundation. All of that packaged together, which is a really good story, not only to tell your leadership team and your stakeholders and your board and your investors, but to tell your regulators and your examiners, and to even tell, I think, your prospective fintech partners, if you obviously you want to take credit and accountability for what you built as a bank, but be able to say that you worked with FS Vector to make sure you did it right. I think that can actually add credence to the legitimacy of the partner program that you built.
Ethan, why don't you tell us, like, why does FS Vector, and I'm not going to give you too much of a platform to advertise, but like, I think it's important to look for certain qualities in a partner for consultants, for the compliance specialist. So why does FS Vector, why is that a positive signal to examiners?
Yeah, I think there's two main things I call out. And I think this is not unique to FS Vector, but it's unique to good advisors, which is they will not tell you and we will not tell you what you want to hear. We're going to tell you what you need to hear. And like, that is extremely important when you're building a bank partner program. Risk and compliance, of course, but like the realistic ability to make this program successful and profitable, and turn it into something that you're going to be really proud about. That is really important, just to be blunt. And we are blunt, but I think our delivery is quite nice. But I think
blunt but nice.
Blunt but nice. But we really are more than, I think, high-level strategic advisors is really where FS Vector sets us apart, and where we've gotten credibility is that we'll tell you and advise on a high level what we think your strategy should be in terms of your fintech partnership program, all the things that we've discussed so far, but we'll actually get hands-on in building those things. We will be building the policies and procedures that serve as the foundational elements of the program. We will be engaging in and leading conversations with the technology vendors and the reg tech vendors that you're going to plug in. We will be hands-on in implementing those technology vendors. We will be side by side with the bank's risk and compliance team when they're going through that first due diligence packet that the fintech is sent over, and identifying red flags and things that they should be aware of, or follow-up questions. Like, is this AML policy of your fintech partner enough to give them a thumbs up, or do they need some substance behind that? So that hands-on nature of FS Vector, I think, really sets us apart. pontification, which you love, Steve, is really nice. And I think there's a lot of advisors that can pontificate in the space, but like getting hands on is, I think, more important.
Yeah, I agree. There's a couple of things you've mentioned, Ethan, I want to dig into just a little bit. On this particular topic, let's start with the fact that you were mentioning that you help a bank with their strategy. Is it different for each bank? I mean, be honest with me. Do you have a different strategy where you say your program should look like this and it's different than the last bank you spoke with? Or is there a little crossover and similarity? Be honest.
Yeah. No, yeah. I'm not just saying this because I think it sounds like the right answer, but this is actually, there is no two banks that are exactly alike. There are no two bank strategies on how to get into BaaS that look exactly alike. You might use the same, middleware providers. You might use the same reg tech. Sorry.
He said it. He said it.
We cut that out. No.
Yeah.
You might have a similar technology stack and even operational stack and structure at the bank, but that doesn't mean that you're going to be looking for the same type of fintech partners in terms of products or maturity or like leadership team, or have the same strategy in terms of how fast you want to scale the program, how many partners do you ultimately want to get to. I mean, there's so many variables that go into it. Between, the bank's charter at the highest level, the bank's size, the assets under management, the balance sheet implications. Are you a CDFI, which will impact your partnership strategy? What does your staff look like? How have you automated your existing operations, and how quickly can you? There's so many variables that go into it. I didn't even scratch the surface. So we know that, and when we're coming into a bank, we recognize that, and then our advice changes from bank to bank.
Okay. It does sound like you knew what the right answer was. That is the right answer, good for you. But now I assumed that was the case, Ethan. And I'm sure there are instances in which some of the same plays can be made because of what you've seen in your diverse experience. But it does also feel like each bank has their own personality, their own culture, their own current set of customers that you can look at to see if there's heavy concentrations of individuals in this particular sector or profession. Does it make sense to look for fintech partners that also are specialized in those areas? So I was always kind of curious about that. But even more curious, I want to take you to my second question. And it was something you mentioned earlier, where you said you prefer to come into the conversations earlier to help a bank determine whether they should be a sponsor bank or not. And you said some banks probably shouldn't be sponsor banks. For anyone that's watching this particular clip, what do you look for as far as red flags or naivete indicators that say, you're great at so many things, not sure if BaaS is going to be one of those? You have any personality traits of an FI?
Yeah, and there's like two things I think in particular that stick out, which is just the investment, like how much it actually costs to stand up a program, and then how long it might take before that becomes profitable. It's not like, you spend, I'm just throwing numbers out there because it's different for every bank. It's not like you spend $1 million on the infrastructure and the build out, and then you're immediately getting $1 million back that first month.
Exactly.
It takes years. So if you don't have the capital to make this investment, obviously that's, I think, a no-go. If you raise additional capital, maybe there's options there, but if you don't have the capital and or the appetite to sit and wait for that investment to take years to pay off, and maybe that money is better spent elsewhere, then I think that's like an immediate nope. Maybe you shouldn't do fintech partner bank.
I think I often draw a parallel to, if I build a brick and mortar, I'm going to spend probably $2-3 million on the low end to get all that set up and live. And how long does it take before that new branch becomes profitable? And so that's what I found helpful is, yes, there's a spend. It depends, and I'm going to disagree with you slightly. I don't think it takes years and years to get.
Not allowed.
We don't want an echo chamber here. So I think it does take time, but I would venture that I could get a branch that is embedded finance profitable faster than I can get a brick and mortar branch profitable.
Yeah, that's a great way to look at it. The opportunity cost of like, if you're not spending this money on venturing into BaaS, like where are you going to spend it? And what's the ROI on that? It's a good way to look at it.
You know, and there you could have identifying that niche play. You know, like if you can identify fintechs that they are a natural vertical to what you specialize in your local community, and not specialize in community service, which is what everyone likes to lean on. We know that that's what community banks are built on, but who is your customer base? Who are you serving? And is there a natural fintech play there? Because you can just take that and just expand it into a digital network. But anyways, it's like two reasons, right? And
the second reason, which I think, like Steve, I know you have direct experience with this, which is like, you can't be a champion for getting into BaaS at a bank without support behind you. Like one advocate for fintech partnerships at an institution is not enough.
Sure.
So if I were to be, the FS Vector team were to be brought in by one person, and then we were finding out that they were the only person that was really bought in on this idea. They didn't have the rest of the executive level really bought in. The board wasn't bought in. It's really hard to build something in a silo as important and as operationally complex as a fintech partnership program. So if you don't have that buy-in, I think you probably shouldn't get into it.
How do you test for that, Ethan? Does FS Vector look for opportunities to speak to the board, to speak to executive team members? How does that look? I mean, how do you prove that out? And it might have changed over time, of course. So
ideally, we like to get in front of the board and the senior leadership team, the C-suite level, and that will happen not often, but sometimes that happens before we're actually engaged formally as an advisor, where I will or other advisors will join, not the quarterly or formal board meeting, but just an informal gathering of the board or senior leadership team, just to talk about the opportunities that we're seeing in bank partnerships, and where the kind of the industry is heading, where the opportunities and revenue streams are, and then start to kind of a back and forth with that board leadership team. And then if we're formally engaged, it becomes much more than that, where we have obviously formal confidentiality agreement in place and things that where we can really deep dive and sit in on informal board meetings and participate and advise in a way that influences decisions more than just like taking a temperature. But if we don't have that, that's okay, depending on the institution. There's sometimes where like we've come back and we saw a board resolution to move forward, or a senior leadership committee meeting resolution to move forward on it. We're like, all right, that's buy-in enough. Let's build this thing.
Yeah. I've got to tell you, whenever Steve first mentioned you and FS Vector to me, and he mentioned your legal background, I didn't exactly see the through line. I have come to appreciate that a bit more as I've gotten to know you, and as I've learned more about the services that FS Vector provides. Are you an anomaly there, or are there several others with legal backgrounds?
A lot of folks at FS Vector are lawyers by training. Certainly not a requirement, because I think there's the diversification of backgrounds and experience at FS Vector is, I think, what makes it so interesting and appealing for a lot of our clients to work with. But it is a nice background, particularly when there's so much risk and compliance that borderlines on like legal.
Agreed.
And like one of the biggest things of your bank partnership journey is the legal agreements that define and are responsible for your relationship with that fintech. And there's so many things within that legal agreement that are operational in nature for the risk and compliance program. So having like, the legal understanding of what words and structures and clauses mean and how you operationalize those things helps. Although FS Vector, it's always a good thing to disclose. We're not a law firm. We do not give legal advice. But it's certainly, sometimes it's a bit of a gray area.
Yeah.
And Stacey, I just want to add to those that have joined us live and are not watching the recording. If you have questions, please pop in the chat, especially if it is, I think Ethan loves to talk about politics and religion, or provide free legal advice as well. So,
Oh.
Yeah. But no, if there are questions on this topic, please let us know. We'll be happy to cover that.
Well, Steve, I have a question for you. Is
Okay.
this allowed? Can we go?
I mean, I reserve the right to not answer, but yes, absolutely.
You can plead the fifth. That's my legal question. How did you get buy-in in your first entrance into BaaS? You were the champion. You were the advocate that I was just talking about. How did you go back to the leadership team and say, this is something we need to do?
I think I could have done a better job, quite honestly. But the theme, if I had to say one thing to do, it's repeating like over and over again, what is BaaS? And there were times where the board would say, Steve, we don't understand it, but we trust you. That should have been more of a red flag. I think there needs to be even more education, and you need to have it throughout that organization. Now, tellers, they don't necessarily need to know like how embedded finance works, but they need to be aware of it. It is something that is an initiative for the bank. It's a top priority. You don't want to have a financial institution that has embedded banking as like, we're just going to tiptoe into it, and if it works great, we'll make it more of a priority. You need to have it throughout the organization, understanding it some level, and just people, they need to hear it over and over again, what it is, why it's a benefit, why you're doing it, and just continue that educational cycle. It really, I don't think education should ever end in this aspect.
Yeah, for sure.
Yeah, it's something I think we take for granted, us three, and I think a lot of people in the industry, which is like the foundational elements, definitions, taxonomy of what is banking as a service or lending as a service or bank fintech partnerships. And there's that like initial education piece for your entire bank, but most importantly, the leadership team and the board who are ultimately going to be overseeing these things, not be stressed enough.
I completely agree. Ethan, you guys do more, and I don't want to get too much beyond BaaS here, but you do way more than simply strategic consulting in the embedded banking environment. And I want to point that out simply because I do find that, again, when I think through lines and I think of the reasons to know and engage with people that you work with in the environment, it's always nice if there's an opportunity to transcend the BaaS side and the traditional FI side. Would you care to just share a little bit about just high level, before we get back to some BaaS questions, some other things that you work with? Because I know, Steve, you guys have worked in your past a couple of stints on things beyond just BaaS. So help me out there.
There's two high level subject matters that we're really focused on right now, which is AI. And that is,
wait, what?
It's this like new thing I keep hearing about. I don't actually know what it stands for.
I was just about to ask.
I'm still working that out.
You said FS Vector is not a law firm, but is it an AI company?
Oh,
it's still fsvector.com, not fsvector.ai.
Yet.
For now. We're doing a lot of work in AI as it relates to financial services. So we're advising our banks and our fintechs on how they incorporate AI into their everyday operational tasks, the compliance, most importantly. But a step further than that is, how do you safely implement AI within those things? And if you're a regulated OCC, SR 11.7 model risk management beholden bank, you need to think about every single AI model you're deploying and your underlying fintech partners might be deploying. How does that mesh with your existing model risk management program? Or how do you augment that model risk management program? And we're also advising AI companies who are selling to financial institutions to make sure that when you get model risk management due diligence questionnaire around auditability and explainability, data transparency and risks of data leakage and all these fun AI things, how do you answer those questions?
Yeah.
AI, I mean, and we're just like scratching the surface on that.
For sure.
We could probably have another call to talk about AI.
Oh, and we shall. And
but everybody talked about it at FinTech Meetup, so I don't know if we need to like rehash everything. We just go if there's recordings of FinTech. Anyway.
Yeah.
The second piece is digital assets. We're doing a ton of work in digital assets.
Okay.
And that expands from the most regulated type of digital asset offerings. I think of a national bank who is offering stablecoin issuance for custody services. They're using an existing or newly formed bank charter, which is a lot of work we're doing, but they're using that charter to offer digital financial or digital asset services directly to the far other end of the spectrum, where we're advising layer one and like DeFi blockchain companies on like very basic elements of like risk management and compliance, and then everyone in between. And that work, as I'm sure you're aware, the regulatory environment, like we mentioned, is very appeasing towards digital asset companies. So that work has picked up a lot in the past couple of years, and is across all three groups at FS Vector, which is worth mentioning. So we have the advisory group, which is a lot of the work I do, the kind of building, the maturing, the partnership-driven work. We have a licensing team that is focused on a number of different types of licenses, but money transmission licenses, lending licenses, broker, collection, servicing, state-level licenses for digital asset, like the BIT license in New York, and soon to be equivalent in California. Then we have a lobbying team that is doing a lot of fun work on interacting with Congress and lawmakers and rulemakers and regulators on very real legislation like the Genius Act and the pending Clarity Act, and how that influences the broader industry. And then, of course, all of that information from the lobbying team trickles down to like my team, and it helps us advise our clients that are engaging in that work. So I think it's funny because like you don't often think of a consultant as like a bank consultant plus a crypto consultant, but that's exactly where we sit. So I like to kind of broaden the definition of where we sit, which is that we're operating at the intersection of finance and technology.
Yeah.
And just to clarify, it's not just financial institutions that you advise. You also advise fintechs on getting them ready to work with a bank. And I always took that as a strong indicator. If a fintech is looking for a sponsor bank and they've been working with FS Vector, I have like, it doesn't mean it's risk-free. It's just a really strong indicator that you're ready to work with me and do something.
That's right.
The signal.
That's right. We started actually, 8 years ago as a fintech consulting firm. And the idea was that there was a gap in advisory for pre-seed or seed stage or early stage companies who were building financial products for the first time and didn't know how to find a bank partner, didn't know what like AML stood for, or how to build a compliance program, or understand like how to embed compliance and risk management into the product itself. And that was like actually the core work of FS Vector for the first couple of years after we started. And then we've just kind of expanded, throughout the life cycle of a financial service company now, whether fintech or bank, where we can be involved from like day one in the build all the way up to if you have the budget on the lobbying world, which is really cool. And we have a couple of clients, which I'm like super proud about, that started as like a pre-seed company, raised a couple $1 million, and now are IPO or unicorn and working with the lobbying team and have been with us over the course of time, which is pretty cool.
That's amazing. I mean, you heard it here first, folks. Any fintechs out there, Ethan and team will help make you that unicorn, and you'll IPO.
Guaranteed. Like,
well, once again, disclaimers.
Your money back like that.
We don't have a money back guarantee, but but I think there is something about if I were to ever start my own fintech, which never say never, but like I think I would feel pride in it and like want to do everything myself. And like if I didn't know certain things, I'd want to learn it or have my co-founders or operators, internal people like learn it and do it. There's just certain things about like being able to use an advisor to unlock knowledge and unlock partnerships and relationships and like leverage FS Vector's network to like really accelerate that go-to-market, like I mentioned before. You have to give up, if you're a founder, you probably have to give up like a little bit of pride and a little bit of your capital. But like the return on that, what you're giving up, I feel like it's just exponential.
Yeah, to that point, I've seen this in action myself. Watching you connect people, you're a great connector of individuals, which appeals to my heart. I know you've also helped connect Steve's organizations with fintechs. There is just this strong signal when FS Vector is involved, both from a bank sponsor evaluating fintechs, but also I think, as we heard a little bit earlier, regulators feel better about a bank sponsorship, as you mentioned, when FS Vector is involved. So they're a great organization. Everyone I've ever met has been fantastic. Gentlemen, I do want to be mindful of the time. We have about 20 minutes. We do have some comments and questions. So I want to start by saying hi to, is that Millie out there or Mike? Hi to you. Hello, everyone. We got this one earlier, Ethan. Coming in from LinkedIn, from the live. And I'm sure you can see this, although I can no longer see your face, just the top of your head and that nice haircut.
Haircut, yeah.
So I'm zooming in.
But I think this individual is likely speaking about some of the challenges involved in sponsor banking when you begin to plug in other elements and areas in which perhaps a bank may be looking for some expertise that doesn't live internal. That's at least a bit of the consensus that I'm grabbing from this, or the context. That individual, we'd love to have them come up and please clarify if that's mistaken. But anything come to mind as you read this question, sir?
Yeah, it looks like there's 3 subparts.
Yep.
So recon
heretofore, section 1, subpoint A. Go ahead.
Yeah.
What's subpoint A?
Recon between the FBO and subledger, pulling in all third-party data and fraud ops are not adequately addressed in advance. So this is it's a good call out, and it's something that when you have 1 or 2 partners and maybe multiple systems, the data disparity and the time to get that data isn't really felt. But when you have dozens of partners or more, and it's multiple disparate subledgers and different data sources, and you're trying to like collate all of that into usable data for ops or fraud prevention or whatever it might be, it's hard to layer something on top of it after it's been built. So if you can address like what your data posture or data strategy will be in advance of the build, and like when maybe you hit milestones of how big it is, when you'll start thinking about a data lake or data orchestration layer, something like that, I think that's important. There's a firm I'll call out who's working with a lot of the bank partners, and you guys know Lee very well. There's a firm, Identify, that works with bank partners on their data strategy and helps them get ahead of this issue and helps them build out their own instance of Snowflake to take all of that disparate data from the ledgers and the fraud platforms and compliance, put it all together into one very like clean, normalized set of data, which then it's like the world is your playground as a bank at that point. You can do whatever you want with that data, but you have to get to that point of like normalizing it and centralizing it.
Sure.
So it's early to think it's important. It's a good call out. You have to think about that very early. All right. So how are we think was it subpoint?
Subpoint B, section 1. Subpoint
B. Let's see. Knowing what platform fees to charge to keep compliance and audit costs. I guess 100% it is. Like forecasting your compliance costs as a bank or fintech is extremely difficult. That's something that we specifically help do, and Steve and I were working on kind of a ROI staffing projections artifact to, and this is before anything was actually built, any operations, compliance, fintechs were actually onboarded. What are all of the widgets that go into the cost? So what are the platform fees for your AML vendor, your onboarding? What are the like per usage costs? What are the staffing costs? What are the audit costs? How often are you getting those audits? Putting all of this into a model is extremely important, not just for compliance, but for your overall ROI on how, what do you charge your fintechs to actually make money? So I do it. Maybe FS Vector can help with it, but you really have to lay out all of these costs before you can get any sense of what to charge your fintechs in terms of your platform fees or compliance fees, et cetera. And maybe, Steve, anything to add to the first 2 points before we get to subpoint 3?
C.
I mean, I've got a lot to add, but no, I don't know. We have enough time to cover it all. I think we learned early on with a certain subledger in a certain bank that lost somewhere between 60 and 90 million. Reconciliation is absolutely You don't commingle FBOs. You need to have that. Involving the first mustache of fintech, his identified company is also Lee is a great guy to do that and make sure you have that data. And yeah, I had a conversation last week, and it was like we all thought Evolve was balancing, and turns out like banks are expected to have that, and then it was like they were just expecting the other one to do it, and it turns out it wasn't. Another comment, and we may have to come back to this later, but I heard on the economics of the deal that there was a fintech and two banks, and they were racing to the bottom trying to get this fintech. And I find that extremely interesting in that it's no longer fintechs begging for a sponsor bank to take them. They have banks competing over them. And so after you answer this third one, I'd love to circle back and talk about the state of embedded finance and the window for banks getting into it or looking at it as a viable option for their go forward strategy.
Yeah. Before we turn it back for subpoint C, I just want to make one quick comment about what you just mentioned, Steve. I completely agree with you. As normal, we normally see eye to eye on most things. A lot of things we see eye to eye on, but I do think it's very interesting, your comment about now fintechs have more options. I think that is so true, especially as we're starting to see more and more fintechs take a second position amongst sponsor banks. It's a very, very interesting dynamic now where we're just seeing this as where we have a primary and a secondary sponsor bank. Also, we're starting to see the same types of subledgers, competitive subledgers in the same FI. That might be something we can talk a little bit more about. Each of those subledgers bringing in fintechs, just like FS Vector does from their purview. It's an interesting time to be in banking, and it's an interesting position, I think, fintechs to be in shopping for their sponsor bank. But I digress. Subpoint C, Mr. Singleton.
I can't wait to talk about those points though, because it's a foundational shift in like the power holding
for sure
bank fintech. That was maybe more epic.
About 10 minutes left.
So like subpoint C is actually very much related to this power position and the shifting of kind of who holds leverage, especially as we're thinking about interchange, because it's one of the hardest things to split up between a bank and an issuer processor and a fintech and like make money on. So the rev share on interchange as you're a fintech and you're negotiating your term sheet, if it's a card program and that's really the only source of revenue for your card program, you're going to find that it's a race to the bottom between the banks to try to get to a point where they're making money and you're making money, and it's just like really tough. I think it's very tough to have a rev share on interchange is how you're mostly going to make money. Interest is another really interesting one. 100%. It is market based, and I think what we found is even how the banks are pricing rev share on interest is changing, and even like the model of which, like sometimes it's 80% of the effective federal funds rate or 70% or whatever it is. Other banks may structure it as the federal funds rate minus a certain number of bips.
Right.
If interest rates really go down, and with this macro environment, who knows where they're going to go, but like that model of like minusing bips can actually hurt the bank as the interest rates get lower. So all that said, like the market, I think, is starting to normalize in terms of like what banks feel comfortable paying on interest. I remember seeing fintechs getting like 95% rev share on interest, which I just don't see that in our term sheets, and we don't recommend our banks offer that. But maybe somewhere between like a 65 to 85, just totally dependent on the program, feels a bit more market these days.
And you do advise on that for the purposes of the people asking these questions and people watching this on replay.
Yeah. And it's, we are a compliance consulting shop, but we are really a program consulting shop. So there's like kind of no piece of the puzzle that there's like no question that we can't offer, I think, really good advice on. And the commercial piece of these partnerships is extremely important. Not just what are the line item costs that you're going to accrue or charge in the bank fintech partnership, but what are those costs and what is the market kind of seeing in those costs? And so we've done some kind of like pricing analysis work. Once again, back to our question about like strategy for specific banks, it varies. Like costs for each of the banks varies, how they make money. Are they going to be using some of the deposits to help fund their balance sheet for lending? That very much impacts revenue opportunities. But yeah, 100%.
And just to add on just a tiny bit before we move on, but it is bank specific, like you were saying, Ethan. So if you have overnight funding, if you have that capital structure, you might be able to pay more depending on where you are in your sponsor bank journey. That needs to be factored into that interest rate. And it's largely market driven, but you can also look at skinnier margins where I wouldn't pay, like I might pay a fintech, theoretically, I might pay a fintech more than I would pay on a CD because I'm going to have the volume. So if I'm only getting a few bips, I'm okay with that as long as the volume is high enough because that translates to real dollars.
And it shows like all of these things we're touching on is just like show you how complex these partnerships are. I mean, there's just so many things that go into building these and like building them the right way. And it's like very hard to make them successful. And maybe I'm scaring people away from getting into it, but like if it was easy, then every bank would do it. And then there would be no opportunity to make money on that.
And I'm glad you mentioned that. I actually think for anyone watching this, don't be afraid of it. It gives you the freedom to think creatively, to build your commercial economics differently per partner based on what they're bringing to the table or what makes sense in your environment. Hopefully not just at that point in time in your environment, but in your environment, the macro environment, the way we see the industry moving. You get to be smart. You get to play. It's not just a flat rate on a loan or the time deposit that Steve mentioned. It is plugging in pieces and parts that make sense to make a partnership work. So I think it's highly engaging work, that piece. A few other things before we just end with the state of BaaS. Anzar, for your benefit, hi Anzar, by the way, FS Vector, not a law firm. They do just simply have a lot of legal minds and talent, including the one and only Mr. Ethan Singleton that you see here.
It's a great question, but there's also something to call out there is that we actually partner and work very closely with law firms in this space, and there's a very, very good number that we work with, and they're great, and we collaborate. So like I think the best example is like the master program agreement between the bank and the fintech. Like we are in there, the lawyers are redlining, and they're doing the actual legal work of redlining agreements between the bank and the fintech. But we're advising in real time on how this implicates how you build your compliance program or operationalize
nice.
Or like how it economically impacts your business. So if someone's on the call and like is a bank or is a fintech and needs a lawyer, let me know. I can't advise you, but I know a ton of lawyers that could.
Yeah, I think in that regard, it's a nice translation layer between the legal side and the bank side. I could imagine it could cut some cycles as well with hourly costs. Go ahead, Steve.
And just looking forward, our next Layers and Players is going to have a few attorneys on as well that actually do practice law, unlike Ethan. So,
I can't wait to see who it is. I hope. Oh my God, what a great comment.
I know. And it actually tracks with something I've heard you say before, that BaaS is not just for the casual banker. You're in or you're out with BaaS. Don't just spend a lot of money and then not do it, or spend a lot of money thinking that you're going to make a lot of money in 6 months to pay for the program. So any other comments there, Ethan, before we head on?
Yeah, I think there was a model, and it's long gone now, where you could be a dabbler, a bank who could engage with a technology vendor or two who would kind of profess to do everything. All you have to do is rent your charter, pay us an ungodly amounts of money. We'll be the technology, we'll be the risk, we'll be compliance, we'll do everything. And like we know now, after the 15 or so consent orders between 22 and 24, that model just doesn't really work. So that if there was a time for dabblers, it was in 2021 or before. Certainly not now, or I think any time in the future of banking.
Yep, agreed. One final comment just to boost your ego from Jay. Ethan is an anomaly. He is a powerhouse. And he is one of the good guys that you see out in this space. All right, gentlemen, we have a few minutes left. We have about 6 minutes before we need to let our audience get back to their day and Ethan get back to helping individuals build their programs. So my question, why don't we talk about the landscape? Few things top of mind for me right now. We mentioned at the top of the call the number of fintechs getting charters, or the OCC handing out charters at a very progressive rate than what we have seen in past administration cycles and past periods of time. Love to hear your thoughts on those, as well as these stances where we're starting to see more fintechs now using secondary banks, secondary sponsor banks, smart play, and now this environment where we're starting to see competitive subledgers come in to the same institution. Not something I saw really a year and a half or even 2 years ago. Guys, pick a topic, pick something you're passionate about, and let's go.
You want to go first, Steve?
You want to go, Steve?
I want to take the opposite stance of whatever Ethan's about to say.
Oh, okay. So he needs to go first.
All right, I'll go first. These are all near and dear to my heart. So I'll start with chartering, because we have a chartering practice led by Jasper Snefnani, and him and his team have been unbelievably busy.
He is one of the smartest individuals I've ever met, by the way.
He is. If you haven't met Jasper, I really highly recommend it. Unbelievably intelligent. We're very lucky to have him. And he's, the chartering practice at FS Vector was non-existent because they just weren't giving out charters for a very long time. And so when this new administration came in and kind of opened up the floodgates a bit, obviously we turned on the faucets, and it's not stopped flowing. So we've done National Trust Bank charter, bank, OCC, National Bank charter work. We've done a lot of work on the innovation charters in Connecticut, and the Maltby charter, acquiring charter in Georgia. I mean, it's a very, very hot time for charters. But I think if I were to summarize my thoughts on it, is that just because they're giving out charters doesn't mean that you as a fintech should go get one. It's an extremely difficult, it's an expensive process. It takes a lot of time to prepare all of the materials and get everything in order just to be able to submit the application, which can take months just to get to the point of submission. Then you're talking about more months in terms of to get conditional approval, and then even more time to actually spin up your chartered institution and start operating. And it's a very expensive, timely process. If you're de novo or net new fintech, the odds are low that it's the right decision. Not to say that it isn't for some, if you can raise the capital and you have the right leadership team and the right ideas. But I think something to keep in mind is that we are seeing fintechs that were traditionally using bank partners get a charter, and they're going to start to move off those bank partners. That's a big loss for those fintech partner banks. And we're going to help FS Vector, we're going to help advise them on kind of what comes next.
Okay.
I think most of the fintech partners don't want to go that way. So I think most of the bank partners are safe, and that you don't have to be too worried about a complete flight of your deposits and your fintech volumes in the coming years, because everybody's going to go get a charter.
I want to pause you there for just one quick moment. I know we have 3 minutes left. Bank charter does not necessarily equal FedMaster account, right?
It does not. No, those are two completely different things. Yeah, FedMaster account is a different process. You have to have a charter of some type to be able to apply for and get granted access to a FedMaster account, which is an important key to have if you're a banking institution. But we've seen, if you're an OCC bank, you're likely going to apply and get a FedMaster account. If you're using a different, more unique charter, like the Speedy State Charter, Special Purpose Depository Institution out of Wyoming, we've seen how tough it can be, and only one has been able to get a conditional FedMaster account.
Right.
And so just to add a little bit more on there, having a charter is hard, and it may not be as hard right now, but you can't set up a business for the next 2 years. And remember, there's a 5-year look back for examiners to come in. So as a fintech, if you're going down that path, it is not necessarily as easy as it might look from the outside. I do think that banks may be sleeping on it, being a little too comfortable in that because of just the volume of charters that have been granted. So I think there's that flip side. Banks need to be cognizant, aware of it, and look at it. But also, like I can see both sides. It's not a magic wand, but it is fascinating to watch.
If you think having a bank partner is hard and like their oversight and examinations and compliance requirements are hard, that is like absolutely nothing compared to having the regulator. Which I think like that's important. That's what you're trading. You're getting more on the economics, certainly, because you don't have a bank partner that you're paying to use their charter. But then you have to deal with the very smart and tough people from the OCC and the FDIC and state regulators.
All the things, and there's so many audits of so many different flavors, technology. There's it's a lot, gentlemen. I think we're going to have to end on that note. Ethan, I would love to continue the conversation, especially sometime picking up with this topic where we get into what the landscape looks like.
Yes.
I want to dig in with you as well on some of the differences, why you see a bank go one charter route versus another. Perhaps, Jasper can give you a cheat sheet. By the way, you're a very intelligent guy as well. Jasper is just
Jasper.
It's intelligent. Yes.
Yeah.
Ethan, from the bottom of our hearts, thank you so much for joining us today. For anyone out there that is thinking about getting into banking as a service, either from the fintech side of the house or a bank that's considering being a sponsored bank, I want to leave you with this. You do not have to go this alone. There are individuals and companies like FS Factor and individuals like Ethan that do this for a living, and they do it extremely well, fairly, how did you say it, blunt but nice, as needed. If you are looking for blunt but nice, please connect with Ethan. Check out FS Factor. Last thing, Ethan, where can people find you? Where are you going to be?
You can find me in New York City most of the time. I'll be here for New York FinTech Week, which is at the end of this month and the first week of May. We're doing some really interesting chartering conversations that we'll be hosting at our New York City office. We have a coffee event here. We'll be doing some other events around the city, some dinners. I'll be at Consensus. I'll be in Chicago for a FinTech Risk and Compliance Forum. So I'll be traveling a lot. Or you can just find me on LinkedIn. Where I'm pretty active as well. Stacy and Steve, thank you so much for having me. It's always a pleasure. Great conversation, great topics. Hopefully the people that were on today had some good takeaways, some good learnings from the session today.
Well, I think they did from the questions coming in. Love it. Ethan, thank you so much, kind sir. This will not be the last time we speak. We'll pin you down again.
Awesome. Thanks, guys.
Thank you all. Everyone have a great day. Bye-bye.